Hi, welcome to Trendy Options. Today we're going to be talking about trendy fibs. Some may know that as Fibonacci, but right off the start, I just want to let you know I use Fibonacci or trendy fibs as a ruler. So what I do is basically use it to identify certain percentages within a range, and I will definitely get to that here shortly. I'm going to show you how to set them up, also what they mean to me, meaning each number, what it means to me, and how they correlate with supply and demand. As you all know, I like trading supply and demand, and supply and demand can be very tedious in trying to find certain candle patterns and so forth. So what I did was I went back and studied, and I studied, and I studied, and I found that if we just use Fibonacci or a ruler, and we can find where these pivots are, where these supply and demand zones are, we can simply use the trendy fib. Afterwards, I hope this will be able to help you identify supply and demand, even sometimes with targets, but that will be our next video, and I'll show you how you can identify targets and so forth, but we'll talk and hit just a little bit on that today. All right, let's go ahead and get started. So the first thing is on Thinkorswim, if you're in front of your platform and you're using a mouse, a lot of traders use this little button down here to pull this up. But this is a pretty cool secret that not a lot of traders know. If you click the wheel within your mouse, this pops up anywhere on your screen. Pretty neat, right? So let's go ahead and use this. And we're going to use this here. Let's go ahead and click on that. And we're just going to place a Fibonacci here in the middle of the screen, just like this. First thing we're going to do is, depending on yours, if it's set up like mine, you can come in here and right click on one of the lines, okay? And then we're going to hit edit properties. As you can see, these are the numbers right in here. And let's just go ahead and highlight that. So we'll be working in this range here. As you can see, I have the 23.6, the 38.2, the 50, the 618, the 76.4 or 0.764, 0.887. The 0 and the 100, those are just basically the start and finish of the measurement of using the fib tool. Okay. Over here, you can change the width of the lines. Okay. And you can see here I have the outside number 1 and 0 at a 4. And everything else pretty much in between is the same except for the golden fib, which is the 618. Once you're finished here, you're going to simply hit save as default, and then you're going to go ahead and push OK. And the ones that you want to have on your screen, you want to have them checked. Basically, I have everything between 1 and 0. And if you want to copy the colors, just jot these down. You can see here I have light blue for 23.6, green for 38.2, red for 0.5 because we call this the bell curve or the indecision area, or this is where price will typically just kind of go sideways. So that's why I just have it on red. This one is gold for the golden Fibonacci level of 618, blue for the 0.764, and pink for the 88.7. Let's go ahead and get out of here. Once you are finished there, you will see this on your screen. Now I want to show you, this is what this means to me, and I'm going to briefly go over these so you can understand. Now there are two different ways that we place this. Sometimes price is moving up. We call that an extension. When price is moving down, we call this a retracement. Okay? So depending on which way direction is going, depends on how I'm going to place my fibs. And I'm going to show you that here soon. When price is extending, again, when price is extending, my 0 will be at the bottom here, and my 100 will be at the top. When price is retracing, it will be the opposite. My 0 will be here at the top of price, and my 100 will be here at the pivot low. And I will show you that on candles. Now let's talk about the numbers themselves. What's 88.7 mean? It's not even a Fibonacci. It's a measurement, folks. And what I found is that when price hits the 88.7, So when price is in extension mode, price tends to stall at the 88.7 and come back down into our lower targets, the 764, the 618, the 50, and so forth. Okay. The 76.4, now we're only speaking about extension mode when price is moving up. Okay. We call the 76.4 the imposter level. Why do I call it the imposter level? Because when price moves up into the 76.4, usually it will reject very hard all the way back down into the 618, but price continues over the next several days or hours, moving right back up into the 88.7. The reason I call it the imposter is because a lot of traders feel that the overall trend is going to stop here and that we continue down. But instead of breaking down, we typically fall into the 618, go bid, and then go right back up. If you are one that takes the other side of the trade here, you find yourself at the market's mercy. And this is why we call this the imposter. At the 618, yes, this is the golden Fibonacci. Now this is very important. If trend is moving here, the 618, okay, is what we call the golden Fibonacci level. Once trend has broken above the 618, it has broken whatever trend was before it. So let me show you what I mean. Say in this down range, price moves up, higher highs, higher lows, higher lows, higher highs. And then once it gets over the 618, this down range here, okay, this one here, is no longer a down range after we complete and base above the 618. That trend has been broken. The downtrend has been broken. That's what the 61.8 means in extension mode. Now, what is the 50? The 50 is a bell curve. What we find is when price is moving up into the bell curve, we tend to stall. This is where we find chop. Why do you think we find chop here? That's because previously there might have been a high up here, right? And there might have been a low down here. And because we are 50% of the way and right underneath the 618, you find indecision. It's a bell curve. Basically, it's a battle between the bulls and the bears. And what I like to do at this level is nothing. We wait to find out whether price is going to break below or if price is going to break above. This area for me, in most circumstances, is called neutral. Okay, this area here, 618 and the 50, these are neutral for me in between. I'm bullish above, bearish below in extension mode. Now, the 38.2, what does this mean? It doesn't mean much in extension mode, and 23.6 doesn't mean much in extension mode. However, I'm going to show you this. I'm going to show you how all this works on the candles as well. Let's go ahead and hypothetically put some candles over here. Okay, just like this. If we are in a down trend, the 23.6 and the 38.2 are super important here at Trendy Options. What we do is we use the 38.2 and the 23.6. We call this a bearish channel. And matter of fact, I call this one a super bearish channel. And this one up here, I just call bearish. Okay. Just like that. So what does this mean? That means once we curve around and we find ourselves at the 23.6, we do not forget that we are in a downtrend. And with poor performance, you will see that price will stop at the 23.6 and come right back down. Okay. Now, if the move does take place and moves above the 23.6, we look for price to stall into the 38.2. Okay. So what I mean by this is that no matter what, even if we take a trade to the upside, we never forget about the bigger picture that we're in a down range and we are still within the bearish and super bearish channel. Very, very important. Okay. Now, what you will find on our screens here at Trendy Options, and this is part of our scripts here, is that this here, the weekly super bullish trend, the yearly neutral trend that's up here, okay? And then over here, you'll see that the monthly super bearish trend, all of this is calculated by past performance within a monthly, a yearly, and a weekly. I don't need to put the Fibonacci's on there. I just simply come over here and I can know that on a monthly basis right now, Netflix is actually super bullish. On a weekly, extreme bullish. And the yearly, it's just neutral. So what does that mean? It's probably just kind of in the middle, right? So these are really great identifiers up there. All right, so please understand that. Again, this is the bearish channel, and I will show you this here in a few minutes. Now, let's take all this off, and now we're going to flip these things around. Remember, click your will. Go ahead and click the fibs. This time, we're actually going to use the bottom and use it like this. So, in a case where price has moved up, and we start to get that formation that shows us that, hey, price may be going down here. Let's talk about the numbers one more time. Remember, the 23.6 in this case, since this is an uptrend, this is considered extreme bullish or super bullish, okay, just depending on how you want to name these, or just super bullish and bullish. But let's go ahead and write them in so that you're not forgetting, okay? So this is going, let's just call it extreme bullish, since that's what our things say up at the top here. Extreme bullish, okay? And then right down in here, we're going to call this super bullish, just like that, okay? So what does this mean? Now, I will tell you, it doesn't matter if we're on a daily, a 5-minute, a day, a weekly, a yearly, depending on the candles, whatever you like to use, this is going to change the way you trade. Because see, most traders start to go short right around this section right here. And then what they find is that price reverses on them. Now, how did I figure this out? Well, I went back and not only did I back test, but I studied. I studied so much because I was the trader who kept going short in these areas. Okay, and then it all started making sense to me. If you just find the right range and you use your trendy fib, right, or your measurer, then you can figure out where price tends to fib it, or not fib it, that's a great word, starts to pivot in certain ranges. Okay, so as long as price is being held up by the 23.6 or the 38.2, overall, depending on the candle that you're using, we stay bullish. Okay? Now, in most cases, when I start to get bearish or looking for the downside trade is after we pass the 38.2. Depending on what this number is here and what this number is here, it tells me if the risk to reward makes sense. So in this case on Netflix, we're looking at about $5 to the 50. Now, what do we expect? If I were to go short here, I would expect price to come into the 50. And when it does reach here, I'd expect it to go sideways. So this would be a good time for me not to be in the trade. Now, price can continue down into the 618. But what does that mean, folks? Let's not forget. What does the 618 mean? This is the golden fib. We are currently in an uptrend. This trend is not broken unless the 618 is broken. Now, I'm not talking about just because it breaks. We need a candle. So a lot of times candles will pierce down, and then by the end of the day, they close right back up here. And a lot of traders get washed out here. So depending on the candle you're waiting on, you're going to wait for a close either below or up before I make a decision. So in this case, because this is the golden Fibonacci, what we can find is price can turn just like that. If I get a close underneath the golden fib, this is where I start to say, now the uptrend is now broken. I'm ready to go short down into my targets below. I understand that this is the imposter fib, and I do expect a bounce here all the way up to the 618, and then I would expect a move down into the 88.7, and sometimes even from the inception of the move. Okay. Now, what we find in most cases on supply and demand, this measurement, these numbers, will find those demand and supply zones for you within ranges. Now that we've talked about how to set them up, what the numbers mean, and how you place them, whether it's an extension mode or retrace, now let's go ahead and take the Fibonacci and apply it to some actual candles. Now this is impromptu, like all my videos, and so we're going to do this together. And we have to understand what range looks like in order to properly place the trendy fib. Okay, so let's start with something that looks somewhat pretty simple. I think that everybody would agree that this is a down range. Okay, now let's go ahead and take this off. And because price is pivoting here, okay, then we expect price to move up. So therefore, it would be an extension mode. When extension mode is here, we look to use that range. We're going to put the 100 at the top and the 0 at the pivot point. Notice this is the range, folks. Notice this is the range. And just one more time so that you understand what that looks like is from this point to this point. Okay? All right, now let's apply the methodology. Price moves down. You can see that once it came into the 23.6 here, it actually stalled and closed under. Remember, this is still the bearish trend or channel. Extreme bearish, super bearish. Notice when price comes up, has a really hard time. It goes sideways. It actually dips down quite a bit. And although it may look small here, folks, this is 100 and this is 92. You notice that price comes up into the 50 to the tick, goes sideways up to the 618. And what this is telling you, look, folks, all the way down from the 618, what it's telling you is this. This down range could not get over the golden Fibonacci. Okay? In fact, it came all the way back to about 88.7% of this previous range here. Okay? Now, once price starts to turn around again, we would call this a retrace, right? So in this case, we would be using, let's get this out of the way, okay? So it starts to roll over, right? It's starting to roll over here. So in this case, this is the trend from start to finish, okay? So we're going to look at a retrace. So your bigger numbers are at the bottom and your top numbers at the top. Sorry, your 0 is at the top, 100 at the bottom. So now we're going to move over and we're going to use the same methodology within this range. Price breaks down, tears through the bullish channels, comes all the way down. This is a weekly candle, by the way. Comes down and comes into the imposter and bounces viciously all the way back up into the 23.6. Okay. Now we can use this all over, and I just want to show you anywhere. We can use this anywhere we want to. Okay. And we apply this on any range. Price goes up. I'm looking here. Price goes up to here. It looks like it's coming down. It starts to roll over. So what do? We place our Fibonacci here. Come to the top. Remember, higher numbers down at the bottom when we're retracing and then coming down. This is an uptrend, folks. When in an uptrend, the golden Fibonacci has held. Now you can look at this all kinds of different ways. The first time it came down to the 23.6, it held, it bounced several points here, and then once it broke, you could get short down into the 38.2. Once this broke, you could be getting short down into the 50 and the 618. But the golden Fibonacci, the only number really that I use on here that I consider Fibonacci is the 618. Everything else is all for measurement for me. Okay. So once it came down into this level, you can see that the uptrend was not broken. Remember what I told you. Notice that price did not close underneath the fib. Therefore, using trendy methodology, we would not be looking to go short. Time is the variable here. The higher the time frame, let me tell you something. If you're looking at a daily candle, you need to wait until the end of the day to make your decision. Because at the end of the day, see, when this happened, a lot of traders would end up going short. If you have the patience, you wait for the trade to settle. So if this is a daily candle, wait till the end of the day. If it's a weekly candle and you're looking for swings, wait for the end of the week. Okay. All right. So that's in retrace mode. Let's look over here. This here, from this pivot point, that's the high, that's the low. This is the range we're looking at. Okay. Because we would be looking at an extension, we would have our higher numbers on top. And as we slowly move across, notice that price comes up into our areas. Because this is the bell curve at the 50, notice how price stalls and goes sideways. Okay, there's not much going on here. Once it breaks above the 618, then it's off. Now I'm sure this is probably right before some earnings, it looks like here on Netflix. Okay. All right. So we've shown you how to place these on Thinkorswim, and hopefully you're able to do this also on your platform. But most importantly, I explained to you what trendy fibs means, how you set it up, what each number means to me, how you place them, whether it's in extension mode or if it's in retrace mode, and how they complement supply and demand. But right before we finish this, it's very important that you take the time to practice finding range. As easy as it may seem to you, it's not. Remember, range for me starts, you have to practice this. Some traders will get this wrong. See, this completes this range. This completes this range. This means nothing to me. Okay? From here See, here is a range. This right here is sideways range. This right here is sideways range. This is your up range. You see? So you have to go back, and what I would recommend to you is use a weekly candle, then get into a daily candle, then get over into your 4 hours and your 2 hours and your 15 minutes, because every time as it gets compressed, it gets a little bit harder. Okay? So just remember that. Practice, practice, practice. And if you have any questions, please reach out to me. Once again, thank you so much for watching this. And you know where to find me. I hope you enjoyed.